Thank you very much for joining and for a little, and I do apologize for the little day. So without further ado, let's start. My name is Fahad Siddiqui. I'm a Islamic banker. Alhamdulillah, I had an opportunity to work with a bank like Dubai Islamic Bank, and then I moved to US and Canada and working for bank and digital transformation project. And after TAIF, I founded Mabrook, which is the world first Islamic tokenization platform. So that's a little bit about me, my background, my passion, Islamic finance, and I would like to collaborate also using this opportunity with everybody here. Let's move on. Next slide, Asan. All right. So the course is for everybody. They don't have to have a blockchain knowledge or they don't have to be an Islamic banker. But what we have done is that this course, the content of it is geared towards Islamic finance. For example, we will try to converge and see how can we implement the Sharia compliant product over the blockchain on a decentralized financial application. And then we're going to explore as an Islamic bank or Islamic fintech, how can we add those revenue opportunities using that blockchain as an infrastructure? But really, you don't have to have a knowledge uh, or any skill or hand. You don't have to be hands-on on the blockchain. We will discuss a little bit basic concept and we go from there. So once what we expect out of this course, once you are done, you should have a very good knowledge in terms of the application of blockchain. And the application we are going to focus will be the tokenization. Of course, there are so many financial application on the blockchain. The popular example is exchange, right? Where you go and buy Bitcoin or XRP or Ethereum, right? That's one of the application. Another application could be you could go on the blockchain application and stake. Another application could be you can do peer-to-peer financing. In our example, we are going to talk about where the world is heading, exciting token, the world of tokenization. And that will be our focus on the course. And after this course, we will expect you to know at least what tokenization is in the concept, on its pure concept, how it works, how as a product manager or Islamic banker or a business manager, or let's say an IT expert sitting in the IT department of the bank, where bank is going to activate tokenization very soon. What sort of the skill I should look into? At least you will have a very good fair idea, and then inshallah after this course, I will really request everybody to go and learn more about it, inshallah, and we'll have a couple of follow-ups in near future. Next slide. All right. So let's dive into the crypto world. Uh, and everybody is aware. I don't have to sell where how crypto is important and how it is the next internet phenomena. I was born in 80s, so I remember then when internet revolution started, everybody was talking about .com. We should have website, and of course there were some people they were or the or the business owners they were saying, why we need a website? We don't need a website. We are doing very much okay, and we and by and a decade passed, everybody was had a website, cell phone started coming in, Apple iPhone coming in, and if we just stop and on the timeline of 2005, we saw on the stock market top 10 companies, only one was a tech company, if I recall, Microsoft. And then if we see as of December year end and we open up the same stock and we see top 10, there is only one non-IT company or non-tech company, which is Aramco, Saudi. So the world has shifted. If you see blockchain, crypto asset, tokenization, whatever it is, take a concept of blockchain as infrastructure, as a new internet, right? Because a lot of people have a confusion that when they talk about blockchain, they think about Bitcoin, cryptocurrency. I think that is like maybe 0.1% of usage of the blockchain. Blockchain is just like an internet, but it's a different internet and it's much faster, much secure, much robust, right? So if you see where the world is going to head in next 5 years, It will be all about uh, uh, the robust DeFi application. So let's spend maybe a minute or two on this slide. Um, Today, the cryptocurrency consumers, they have crossed nearly 737 million users worldwide, meaning that at least the 737 million have one cryptocurrency. And of course, Bitcoin is the major chunk. And if we slice and dice who are the highest consumer, we see in top 10 India, US, China, Nigeria, Brazil, and we'll talk about the compliance and regulation about it. But I don't want anybody on this course to see this course as a cryptocurrency course. I want you to change the mindset and see blockchain as an internet website. Sorry, as an internet infrastructure, but it's a different infrastructure, right? Don't see it from the lens of cryptocurrency because cryptocurrency, remember, is one of the application. Blockchain is just like your iPhone or Android phone, right? Or Samsung phone, which provides the hardware, but you can have as many application as you desire it to be. So the application is based on your lifestyle. What do you want to do? Some people have, work some office. Some people who are working in office, they're mostly office application. They have Teams and etc. So cryptocurrency is just one application on that phone, for example. All right. Now since Bitcoin started as one of the most what you call successful use case, the era have shifted from Bitcoin cryptocurrency to more institutionalization. So if you see the point number three, institutional and regional movement, now the world have understood what the power of blockchain is, and they are opening up with new use cases, right? The use cases of more regulated applications such as tokenization of the Sukuk, right? Such as, by the way, we understand Bitcoin is the next gold or whatever it is, it has some value. Let me put that into my bank's balance sheet as a reserve, correct? So those kind of use cases are coming. Next slide. Okay. I think we did touch it little bit. So there's a typo. I apologize for that. But cryptocurrency is not is not tokenization, right? Um, Now, let me be very careful with that definition. Cryptocurrency means it's a token where I can use it as a replacement of a currency. For example, if I am in US and I have a US dollar, I can convert that US dollar into Bitcoin, and any merchant who accepts, just like your credit card, Bitcoin as a payment, I can go and tap it. That is the utility of the Bitcoin, meaning Bitcoin is a currency. Hmm. And there are some debate happening when you hear Bitcoin as a gold, there's some debate happening that we can also treat Bitcoin as an asset. But the fundamentally, if we look into Bitcoin, is nothing but it's a cryptocurrency, similar to Ethereum, similar to XRP. And the another utility of the Bitcoin could be that if I want to use Bitcoin blockchain, or if I own Ethereum coin and I want to use Ethereum blockchain, then the blockchain will ask me to pay in that currency, right? So imagine that you are let's say in a social club, and when you go into social club, you want to use the swimming pool, the golf course, you want to uh, uh, have a breakfast or something. What they say is to use that, sir, why don't you have loaded card, electronic card, and load the points into your card when you check in. So I check into the social club. I load, let's say, $100 worth of social club, what you call points or top up. And then I have a social club card which can be only utilized in the social club. I can just tap it anywhere and I pay. When I'm out of points, I can go back to the reception and I can top up. That's the hardcore usage of Bitcoin, Ethereum, or any currency you see. And then they have their utility, right? Some of them are doing payments, some of them are not doing payment, they are doing something else. But the point is that the cryptocurrency is a currency itself. Now, when we talk about the tokenization, think of tokenization as a security, meaning that the stock I buy from the stock market, right? Of course, you have the stock, you are the owner of it. That stock ownership certificate is in somewhere in your drawer or the PDF in your laptop. But of course, you're not going to go and then tap your shares and expect them to be a replacement of the Bitcoin, right? They are stocks. They give you some yield. When you want to exit, you sell your stock, you get the currency out of it, right? You settle it in your fiat currency. If they come into your bank account, and you can use that currency, and you can buy and sell stock as you want. So that is the core difference between a Bitcoin and a security token or a tokenization or a share of a asset, right? Which is on the blockchain. Now, other thing to remember in Islamic finance, just like any transaction we do, it has to be asset backed. Similarly, in our Islamic finance world, we have to be very careful that before even we talk about the technology, the minting of the token, the asset has to be there, and all the title, all the legal structure of the asset should be there, just like we have it today. So, example, if I want to uh, move a property, my house, into blockchain, into fractional token, right? Before going onto my laptop to mint the token, I need to make sure that I have proper documentation of my property. The property does not have any interest component. All those tests, checks, and tests we do today in our traditional Islamic banking, we have to apply the same uh, test. Now, yes, of course, we can automate the process, but fundamentally, we have to do the same thing. Now, the moment we come to the token, and we will discuss how we are going to bridge that. So, we have a traditional way of processing the property in our example. Now, how I'm going to transfer that property details that I have vetted can be Sharia compliance, can be the legal structure, can be other documents related to the property, and how I'm going to put it into a token. That is the bridging. That's the bridging, and we'll talk about the bridging later. But that is the fundamental difference between two tokens. Let's go to the next slide. All right. And now when we talk about the security token, all right, we are now focusing on the security token. We are not going to talk about the cryptocurrency per se, and cryptocurrency have their own standard. But in our tokenization, in the security token regime, there are many standards available. You can basically go and look into those standards and apply. So standards are nothing but they are specification. In our Islamic banking, take an example. If you want to transfer money from your account to somebody else's account using internet banking, and there are um, and you are saying that I want to send $100 to my brother or my family, the application will ask you, okay, who you want to send money to. So there's a standard. What is their bank account number? There's a standard which is called IBAN, right? International Banking Account Number, or alike. How much amount you want to send. So there are basic standard information that you will provide that will be relayed to the back office systems. They will understand what your instruction. Then they have a standard to talk to other banks. They both talk into the same standard. That's why similarly we have these standards in security token. These are a couple of standards. ERC means Ethereum native. So we have ERC 1400, ERC 3643. They are nothing but they are built on Ethereum. But then somebody took the standard and they modified it, make it better, and they call it 1400. Somebody took the same base code of Ethereum, right? And then they do something else, they improve it further, and they name it 3643. And these are, and the list goes on. Mostly in the overall tokenization. So if you ask me, Fahad, like I see so many ERC Ethereum there. Why Ethereum is there? Why there's no Bitcoin blockchain or any other blockchain, right? Which is here. Why Ethereum? Is because Ethereum is the what you call the best Ethereum base code provider or the Ethereum infrastructure. Remember the example of the social club? They provide the best services for the tokenization. The way they have built it foundationally, it is really good for tokenization. And We don't want to, I don't want to talk about the technology and whatnot, why it is better and not. Maybe later on we'll talk about it, but this standard you need to keep in mind. And tomorrow when we are in the call, I will request everybody today, after the class or tomorrow morning, I want everybody to basically look into this, do some Google research, some DeepSeek or ChatGPT research on this one. And tomorrow I'm going to basically discuss why Ethereum is the best and which blockchain is the best for tokenization and where the most of tokenization is happening uh, uh, in the world using those standards. All right. Mabrook, for example, follows ERC 3643. And ERC 463 is the most compliant, more near to regulatory requirements than any other token on this list. That's the tip I would want. I want to give on the class. Go ahead, SM. Can you please move the slide? Okay, I think we discussed it. Cryptocurrency is has no backing. It's more just like money today. The way we see it, security token are basically tokens of any asset. Right? They can be. By the way, the shares can be this traditional share today. Let's say Apple, Google. We can also tokenize them, and they can also represent on the blockchain the same what they are representing in the traditional world. Let's move on. Okay. Because for any banker, any professional, they would really want to see some numbers. So that's why we have put together this slide. If you see the heading, as of December end, 36 billion worth of assets are tokenized, right? This slide you see the blue one. This is I think quarter 3 2025 end of period report. It's saying 30 billion. So in just one quarter, we have moved from 30 billion to more 6 billion of the Sukuk, and the trajectory is going to go really high. Boston Consulting Group, researcher group, um, very credible. Their one of their report is saying that by 2030 we will have 16 trillion or more asset tokenized. When I say asset, and I'm not talking about the Islamic finance asset here. I'm talking about the combined asset of everybody, whoever is doing tokenization in the world in a regulated way. Um, those asset includes the more chunk is almost half of the 36 billion is private credit, means those are funds. They are credit for like home financing or some sovereign funds. They are basically debt-based tokens, and they are representing more of that. Then followed by the treasury. There is some treasury yields happening, tokenization, then commodities, and then other. So that's the snapshot. Inshallah, when we are going to send you the slide, you can review more of the details on the slide. So what I'm trying to say is that the market is really ramping up. I really want everybody, especially Islamic finance, to gear up because this is going to hit really hard on Islamic finance. And we, as Islamic bankers, we should be ready and we should understand what this product is and how can we apply it to our traditional banking. And this is what the course is all about. Let's move on. So, in a nutshell, if we combine this tokenization to the 730 million cryptocurrency owners, right? One thing everybody needs to understand, the world today with the crypto, with the of course the combined cap of all cryptocurrency is I think 3.2 trillion today because markets are really little down. But when the market goes little bit, there's a little bit what you call bull run towards market. The market is hovering around 4.2 trillion dollars. So 730 million people in the world owning 4 trillion, right? The moment this phenomena of tokenization will start and more regulation will be hitting into the market, right? Because remember, most of the currencies, cryptocurrencies are not regulated. I mean, to keep it very simple, none of them are regulated. Like, let's assume that. So if we are going to start the tokenization and those are asset backed, we see a very good convergence of people moving, migrating, the people who have invested in cryptocurrency for the sake of investment, migrating from the cryptocurrency world to the security token world because it will give them more security, low volatility, right? Imagine if you have a cryptocurrency like take an example of Bitcoin is not a good example because it's a different ball game altogether. But let's take an example. If I have a currency called Ethereum, right? And I see UAE or Saudi have just tokenized a sovereign, they have just rolled out a sovereign credit or Sukuk, or let's say they have tokenized a property in Haram. Of course, if I have an Ethereum, right, I will try to shift it to that because now I see that there's a tangible real estate behind it. It's backed by government. It is churning monthly rental for me. There's a capital uptake. The volatility between the Ethereum, which is going up and down because it's not backed by any asset, and the volatility of or price up down of a Saudi haram property, let's say in Medina Munawwara or let's say Medina Munawwara, the volatility of the or the price dips will be very less. It will be very stable, right? If the price even go down for some couple of times, it will come up. I know it because the traditional real estate price are, if we see the history of 50 or 60 years or 70 years, even if they go up and down, right? The average is better than a volatile asset like Ethereum. Next slide, Azam. All right, I think we discuss because most of the product managers would want to see the market sizing. So we just put together this slide for you guys. With 60 trillion is BCG saying tokenization in next couple of years. But then we have other research coming in and they are basically doing one level down of each segment, where the each segment is sitting. So we talk about a lot of exciting tokenization and the banking moving from a traditional infrastructure slowly to the tokenization or blockchain infrastructure. Next slide. Okay, let's pause for a moment and let's think about the problem statement. All right. So we spoke about the market sizing. We spoke about the cryptocurrency, their consumers. We talk about how tokenization is going to bring some exciting billions and trillion dollars in the market and maybe more liquidity, right? In a lot less and a less volatile crypto assets. What problem is going to solve? Give us like a one example, right? So we can comprehend, we can wrap our head around if we have a problem, how the blockchain is going to solve it and how. All right. So take an example of Sukuk. If we do Sukuk today, how many times we have seen a retail Sukuk? Meaning, if I'm a salaried class person or a small medium business owner, or I want to do some savings for my retirement, I how can I access a Sukuk? So if we see a recent example, mine is the Emirates National Bank of UAE, who have launched a Sukuk. I think you can own a Sukuk with 5,000, very limited. If you take that example out, the minimum ticket size I have seen in my life is 200 to $250,000, and it's more institutional gear. So Sukuk is launched, institutions or high net worth individual client buys it via broker, and Sukuk is oversubscribed. So we don't get it as a retail banking. In blockchain world, and why Sukuks are so highly, the ticket size is high is because the operational execution of Sukuk in a traditional world is high, and we will see why. Why is that? It's just like in old days, I used to go outside, and if I want a taxi, I used to do some effort to get a taxi. Today, I can just use the app to do it. So for me, the time saving happening, the cost efficiency have increased, right? And similarly, we will see how blockchain have given the infrastructure where I can also do a sukuk and I can tokenize it with merely $10, $100, $50, and we can push it to the retail clients. So that's one of the problem, and we're going to see how we're going to solve it. Couple of examples, but those are the problem we're going to address with the blockchain: accessibility, more security, right? Um, Efficiency. Efficiency mean not only we are going to fractionalize and create a fancy token out in the market, put it on the blockchain and advertise, hey, by the way, my bank or we have issued some token. We are going to see a real efficiency of decreasing the cost of doing things, right? With some time, the costs have been significant. Like take an example of settlement. If you're doing transactional settlement, meaning I have purchased a token of a Sukuk, it's on the blockchain, and I want to sell it. I can send it instantly, and I can get a settlement like the dollar amount back into my wallet within couple of minutes. And there is no middle broker, so there's a per transaction cost saving as well, which is phenomenal. And of course, the security we'll talk about. Security is the entire infrastructure provide you security because until unless some hackers in the near future going to hack, there is no hacking in blockchain today. The hacking we are going to talk about will be the connection point, and we're going to talk about it. So, in a nutshell, fractionalization. So we can distribute the token into fractions of $1, $10, $100 that we desire. So it has more retail outreach and global reach. So we can raise funds from globally from those retail in a safe, secure way. And the efficiency or operational efficiency and the security. Just keep those three elements in your mind. Go ahead. Change the slide, please. And we discussed, Sukuk. There is right now every year we are averaging 190 to 200 billion today. I think we crossed 1 trillion last year. So that is the milestone for the Islamic finance industry. So total industry hovers around at December end of period, the Islamic finance industry total assets are 6 trillion. Out of that, uh, we hit the milestone having $1 trillion worth of Sukuk. Imagine we roll out Sukuk on the blockchain and we have this accessibility or the features which we discussed, spoke about, offered. And then imagine 24 into 7 accessibilities of those token, all right? And that people buying in, yeah, attracting more liquidity from the globe. And then we can really start solving problem in Islamic. Like take an example, like as a small medium enterprise owner can do Sukuk on the blockchain, right? In couple of days after all the vetting, and he's able to raise the funds globally. This is phenomenal. Next slide. All right, let's pause for a moment and let's do a poll. I really want you to tell me how familiar you are with the blockchain world, generally speaking. Okay. And as an a 1 to 5, so one is one meaning, sorry, maybe it's a little confusing. One meaning is the five is the highest, right? Five scale is the highest, correct?
Yes, 5 is the highest.
Okay, okay, cool. We'll give another minute for everybody. All right. So at least I can see right now, mashallah, 40% of the folks have very reasonable knowledge of blockchain. That's really good. And inshallah, when we are having QA, you guys can also ask question and maybe we can interact more, collaborate on that. It's really good. All right, let's maybe end the poll and move on. Okay, can you go back? No, no, okay. Right. All right, let's go to the next slide, Asim. All right. So some people will be thinking, why now? Why Fahad and Hassan or Taif? They are focusing on tokenization, why they are talking about tokenization, why they need our attention. So the reason is one. We have our Islamic finance started it in 1974, hitting 6 trillion mark, right? And we see the world is shifting, especially I've been very active going into Silicon Valley in last year in US. Things are really going crazy way. Like take an example of BlackRock, the world, I believe BlackRock is the world largest investment banking firm, if I'm not wrong. And whatever they do is influence the world globally. They have launched their own stock treasury funds called BUIDL, BUIDL, and we'll talk about it later on, maybe tomorrow. Similarly, other investment firms are coming in. The other near example would be UAE. They have tokenized a lot of properties. So the success use cases are coming into the market, and people now are seeing the value of it, especially the banks are seeing the value of it. Um, this course, why, and this topic is very important because we need to get ready for this new digitalization phenomena, right? When I say digitalization, of course, you have been listening digital transformation for last couple of years. What is the difference between that digital transformation and this digitalization? The difference is a complete new infrastructure, right? Imagine take an example again, going from manual processes to internet-based processes. See the efficiency, see the shift of the market, right? Then iPhone phenomena comes in. You have a new phone coming in, and Nokia going away. And now you can interact with the phone. Basically, you can do whatever you used to do on your laptop on your phone. Blockchain is 10 times more than that. And why it is that? Because the efficiency it provides, the traditional stock market or the capital market can really not keep up. Okay. And it not only the efficiency, it provide you the transparency as well. So let's assume if you want to verify that I just purchased this digital certificate of a real world asset, right? Or gold. How can I verify it? Of course, you have a PDF to verify it, but you can also go to the blockchain infrastructure. You can input your token ID, right? And you can verify. And verification will not happen in single place because everybody knows the infrastructure of the blockchain is decentralized, right? There are multiple validators. Validators means people who are going to validate and say, yes, you're right. We see the record and the token ID you have given is correctly right and you own it, right? So imagine that we have that power as well. The trust level goes up, the settlement happens very fast, and and we have this a new tool in our hand to use. Now, how you use our the tool is in our just like the internet is there, how you're going to use it. Similarly, if we understand tokenization in a better way, right, we will be able to use it and maximize its value. And we're going to see a couple of use cases how we're going to do it, right? And anything we do has to follow the Sharia principle as well. So there will be a couple of examples on how Mabrook is doing it. So we'll also discuss that. So we really want you to learn tokenization, learn blockchain, and become the next Islamic banker who's geared to set up that infrastructure, to maintain that infrastructure, and generate revenue for the industry and take the industry where it is to extra four, right? Go ahead, I'll change the slide this. Okay. So foundation, let's talk about the basics. I mean, we talk about how the two tokens are different with each other, cryptocurrency versus the real world asset token and asset backed token, right? Let's recap on the fundamentals. So the security token or the RWA token, right? Same name in some regulation books. When you pick up the regulatory book guidebook of VERA, Virtual Asset Regulatory Authority (UAE), who is regulating all the crypto assets, right? Companies in UAE, you will see ART, it meaning Asset Reference Token. They are the same thing, which is real world RWA tokens. So we are turning the physical assets we see in the world. And we saw that in our target in TAM, when we were talking about the TAM and the market sizing, we were talking about changing real estate into tokens, changing commodities into tokens, precious stone into tokens, maybe oil also will be tokenized as a commodity, right? We're talking about the world shifting, world moving that physical asset into blockchain. And this is where this real world asset token come in. So we are turning the physical assets we have today, right, the tangible asset into tokens. That's it. And how we're going to do it? We are going to use some technology to do so. That's the fundamental of it. Um, it is highly secure. We talk about it. It has a shared ledger because we are not maintaining one database of it, because blockchain provides us the infrastructure to maintain ledger in many places, right? In decentralized world. So the validator sits on the what you call the shared ledger, but that shared ledger is now decentralized, and everybody had ledger in the on their nodes or laptop or uh, some endpoints. So we have millions of endpoints, and millions of endpoints real time sync with each other, and they are validating the shared ledger. So it's kind of foolproof, right? Or tamper proof. Once you write it, you cannot change it. It's not like a single database. Fahad does not have authority, a single authority to go into the database and change somebody's title. If Fahad is going to do it, let's say even if he's able to do it, uh, then SN would have another copy of it. And the moment I'm going to update the data and blockchain is going to execute the checks, it will say, no, Fahad, you have corrupted the data and Fahad will be out of the network, right? So you will always have a tamper-proof data. The real world asset, and also since the token standard we spoke about, they provide us the standard to apply the regulatory norms or regulatory regime or framework we have in our country onto those tokens, so they are regulated. So they provide that. We can fractionalize the asset. The asset has to be the token has to be asset backed. We avoid the speculation because we are talking about the real asset now. We have to vet the asset, or when we are onboarding an asset, we have to check the balance sheet and everything that it does not have the interest component. If it has, then it has to follow the IFE governance and purification process, the standard process we have. And of course, there should not be any uncertainty on the contracts. All right, and we'll talk about the contracts later on. What we are trying to say here in this slide, we have a way to do things today, and when we are bringing asset to the market in traditional capital market, right? So commodities or whatever, we are talking about, we'll do the same process, but we are going to do it on the blockchain, and we'll see how. Let's move on to the next slide. As and we can move to the next slide. Thank you. All right, so let's see this slide. So this slide gives you a bird eye view of how tokenization happens, right? Just like um, an end-to-end process. So we have folks with some fiat currency, some US stable coin, Bitcoin in their wallet, right? Or they don't have to have a cryptocurrency. They can use their traditional wallet they have or bank account. The point is that they have some money to buy it. And then we on the right side, we have the asset. What we do is that we first set up since we are talking about the regulated tokenization, we are going to first do SPV. We will open up a company. SPV is a way to open a company, right? Um, and an account in the bank of that SPV company. And we're going to park that asset or the asset we are tokenizing into under that company name. So meaning before we even move an asset, the first step we have to do is the legal structuring and the Sharia compliance. So we're going to do a SPV model here and an example. We'll open a corporate, we'll park the asset into that corporate company, ABC company. We'll open up a bank account, we'll work with lawyer. Everything is vetted. Once everything is vetted, Then we are going to tokenize the SPV itself, the company itself. We will say it's a ABC company. It owns a real estate building in Haram, and this ABC company has shares of, let's say, it has 100 shares, and every share will be $1, and we are going to mint token of $1 token worth of sorry, 1 unit equals to $1, and we will have 100 tokens coming into the blockchain. All right. And if you see down, we have the same model coming in. There has to be a the fund manager, Mudarib, there has to be Sharia compliance done, all certification has to be compiled. We have to also point out the custodian. Custodian means who's going to take care of the token. Because, for example, in Mabrook, I mean, we can do both. But let's say if we want to protect somebody, right, in tokenization world, and to avoid conflict. Because if I am the issuer, or if I'm minting the token and I'm also taking the custody of the asset on the behalf of the client, meaning the token they are going to buy, I'm going to take it. There's some conflict coming in. So we assign some third party. It can be a bank to become a custodian. So when people buy the token goes from the platform, the blockchain platform, to the bank custody, right? So we have to identify that custodian, and we'll talk about it more. Don't worry about it, like how the custodian works and who they are, and how can a bank become custodial itself. We'll talk about it, and there has to be some auditor who will be doing a regular audit on it. There is some special skill set required at the auditor level. So the folks who are into the banking audit, they also need to, there's an opportunity for you to upskill yourself to get ready for this new infrastructure. So anyhow, so the SPV, we have the company coming in, we have the shares of the company just like any company. Once we decide, we sign off, we go to the platform, or we take that standard we have saw earlier. We pick one, we reject do something, and we'll talk about it later on, how we're going to do, what steps are required, like the granular steps are required to do so. And we're going to mint the token, and we're going to put it on the blockchain, just like a Bitcoin is available on Coinbase or Binance, right? Similarly, the ABC company tokens, or ABC real estate in Haram token, will come into the blockchain. I can use, if you go to the left side, I can use my stable coin, my Bitcoin, my Tether, and my fiat currency to do so. Now, one good takeaway of this use case, what we discussed, and how this is happening. If you compare it with the traditional world, in capital market, there is no way I can use my Bitcoin or stable or coin or any Ethereum coin to go to my capital market application today and buy the shares, right? So that's one of the difference. And this is where we are talking about 730 million cryptocurrency owner. Let's say even 200 million of them, they are just waiting for tokenization to happen, and they want a Sharia compliant token to come onto the market. There will be a run towards it, right? They will say, oh, by the way, I have a Bitcoin, I can go and buy haram property today. So let me get rid of Bitcoin and buy haram property. So that is one of the biggest opportunity we see in the market. Let's go to the next slide. All right. So this is one an example. So the blockchain application does not have to look complex. You can build it as easy as any banking application, and the people who are interacting it or using it should not be blockchain experts. So they can just log in, sign up. This is the way in Mabrook, what we have done is that we have kept it very simple. You can log in, you can go to the different assets, the assets you like, you can go ahead and buy it. Disclaimer, this is not an investment or financial advice, just for the education purpose, and we are just showing you the application. Next slide, please. And then, once I buy the token, I can come into the Mabrook marketplace. I can go ahead and see the price of token, where it is going, all the asset backing details and whatnot, and I can go ahead and see if I desire to sell it, I can sell it. If I want to buy tokens, I can go ahead and kind of buy it. Next slide. All right. I think we discussed this, but just to condense everything, we talk about we were talking about the cryptocurrency, then we spoke about the difference between the cryptocurrency and the security token. We saw a couple of standard of the security token. Then we spoke about high level way of uh, tokenizing the assets, right? We park the asset into an SPV, we tokenize that LPGP or SPV or that company into tokens. What is the end result? The end result is that the moment we do it, we have a fractional token like $1, 1 real for that haram property, right? So the traditional finance today provide a very highly limited access to such assets. And now we have those assets on the blockchain, and basically public and retail buyer can also buy it. They can afford 1 real and they can just go ahead and buy as many they want. Compliance in traditional is very manual. When I say manual, I'm not saying that there is no technology in the bank. Every bank is using technology for the KYC and biometric. But the moment those digital certificate or ownership documents are produced, they are mainly on the application, like on your banking application, or you might have a PDF. In blockchain world, we still call it manual or semi-manual. Why? Because the moment you decouple that PDF from the banking application, there is no way to go and verify that. In blockchain world, it's well audited. Even if I have a token ID, I don't need to know you. You should give me your token ID. I don't need anybody. I can go to the blockchain and I can verify the proof of ownership, correct? And the proof of address, and I can see the entire audit of the token from starting from the minting, then it goes there and there and all those pricing changes, and I can basically audit it myself. I don't need anybody. So that's the beauty of it. Let's go to the next one. Uh, we have several use cases coming in. Um, Sorry for the typo, but the tokenization, one of the good use cases, tokenization of the funds, right? Can be in a mutual fund. We can do fraction share. There's a equity fund, investor buy $100 or $1 token worth of token. They are able to trade instantly. As you saw, one Mabrook screen also giving you some idea. It has built-in verification mechanism as well. So let's say if somebody comes in and they say that we own Ethereum or Bitcoin, and we have a Sharia compliance way of purify it at the customer level. And let's not think about how. Let's think about it's possible. Think about the process. We can basically let them load up their crypto asset, and then they ask some couple of questions, execute the verification method, run it. The other way around is that some asset comes into the platform. Again, we run the Sharia compliance check on it. We see all the balance sheets and all whatnot, the earning. Again, we see some components which is rubber component based. We again execute the verification process automatically. Both ways we do it, we audit and we log it into the smart contract. Now, remember, I was talking about just before this slide, everything is audited. Now people have a very good transparency, and the way they can see the entire process happening on the blockchain with all the rationale and the supporting documents behind that, right? So benefit is more inclusive because now you have a trust. You know that it's not a black box. As a customer, if I want to invest in an asset, I know what is happening end to end, including the Sharia compliance. If I'm an issuer, I have more responsibility because now I see that whatever I do, any changes I do or anything I do has a direct reflection on the blockchain audit. So there's no mid party who can cover me. I can any movement I do, the my customer or investors have their forensics available on the platform or the blockchain. Next slide, please. Sukuk of the real Sukuk and real estate, I think we spoke about it. We can tokenize the Sukuk. We have a standard running it. We can review Sharia Standard 17, apply over the blockchain, build those what you call parameters of that Sharia standard onto that smart contract, right? We can put some instruction around it to follow that. We can tokenize the property. Property is a rental property in our use case. People have token, they are getting the monthly return. The Mudarib is executing the transaction, he's getting his 5% fee. Everything is happening automatically. Everything is audit logged. All the transaction movement and settlements are logged, and they are happening really fast. I don't have to wait for my rent to come. So immediately the moment rent comes into a stable coin format, right? It hits the blockchain or the application, our application. We recognize, okay, by a token that so Fahad or Asan has, let's say 10 token. So meaning that 10% share of my SPV, meaning that I have to give them the 10% of worth of rental. Everything happens automatically. And there's a complete justification, profit distribution module happening inside the smart contract. Fahad gets the return on his wallet. If you want to see that how this profit has been calculated, he can go to the blockchain, he can see the forensics, he can download the formula and whatnot and see, and everything is verified. All right, let's move on. This is one of the examples. So, inshallah, when we go live in here in Canada, this is a building. So, in this building example, we executed SPV first. We did the complete vetting. The title deed of the building was loaded onto the SPV. SPV ABC, in our example, this is called Barton Project. The Barton Project SPV owns this asset. The Barton Project tokens are minted. All the documentation are provided. We embed in each token, we embed the property information, the asset information, it's including its NAV, NAV, net asset value, its parameters, meaning title deed information. Example that, okay, what is the title deed ID, which is at the government level, we embed that. Then we embed about the project. What is that project about? Everything is minted on the token, and the tokens are minted, and they are given to the blockchain audience, or sorry, not the blockchain audience. Basically, it comes from the platform. Anybody can go ahead and buy it. They can buy it as low as $100. The gross ROI for 2 to 3 years, because the project, this is a construction project, and after construction, the rental yield will be executed. So there are two ways to do it. It's very unique to this project and can be any project. One set of investor comes in and they help to build the building. They can stay on, they can enjoy the rental. But if they want to exit, the moment the building is ready, they can go and trade their tokens. So that's the example. Let's move on. This is the structure of the SPV. If you just focus on the mid of the screen, it's called 325 Barton LP. It's just a name, right? Could be any name. Now we have used the Sharia compliant structure of Wakala. So there are some third-party agent hire, and then we have used the Ijara service lease to do so because the landowner needs some money to build the building. So this is how we have structured the transaction, and it's a traditional way of structuring the transaction. Whatever you see, for example, if you see 1.1 DFL raises amount from the investor, right? So it's just a party name. All this information will be embedded into the database of the token. So you can also verify at the token level in addition to the Sharia certification that how this token was structured, right? And remember, the moment we write anything on the token, it's immutable. Nobody can go ahead and change it. So you can verify and you can audit everything. Let's move on. Yeah, and other advisory of a partner have vetted this document. So just like any Sharia certification comes in, it just comes in, it also becomes a part of the token. And we will see how we can program the token to do so in our maybe next class, I think. And let's move on. Yeah, so we just to recap, we spoke about some Sukuk debt tokens, we talk about some mutual fund tokens, we talk about real estate. You can basically tokenize any Sharia compliant asset, right? As far as the Islamic banking, the asset is Sharia compliant, you can go ahead and you can tokenize it. Yeah, so sky is the limit. Let's move on. Okay, let's move on. Okay, so this is like a typical process, and you don't have to worry about this diagram. Once you have the copy, you can look into it. But really, you divide, at least at the Mabrook level, we divide the tokenization process or the entire life cycle of the token, we'll say, into 5 phases. So one is deal structuring, as we were talking about. We set up the company, right? We do all the vetting of the asset, we check the ownership and the title deed, and it can be real estate, can be commodity, can be anything, right? It can be fund. We do a complete vetting, risk management, we apply everything. Uh, that follow a due process of or the onboarding process. And once the deal is structured, in the phase two deal is structured and uh, finalized, signed off by the whoever is responsible as per the regulation, it goes to the primary distribution. This is where the tokens are ready. You can buy it, right? Just like an IPO or initial coin offering, you can buy it. Once the IPO and or the initial coin offering closes, right, from the primary market, the tokens are again reviewed, and once they are approved for secondary trading, they are in the secondary trading, and this is where the trading happen. Let's move on. All right, so that's like up till now what we have discussed, like we started from the token up till we are into structuring the token and we saw some use cases coming in, right? And those are all opportunities. So imagine that if your bank have a blockchain vetted regulated infrastructure, you connect that infrastructure into your internet banking application and you start a new business of tokenizing the assets. So the Sukuk you are doing today, the real assets you are doing today for your high net worth customer to retail customer or a salad card customer, you are basically activating the market. You have now built an entire new market over there, right? Um, and then what we are doing is that I just want to show in this slide. Just give me 1 second. Let me just check. Yeah, this is the last slide, and in this slide, what we are doing is we have divided the transaction into couple of sets. Remember, we were talking about the 5 phases. So this is like one down version of 5 phases, but this is like a blockchain process flow. All right. And I really want everybody to carefully listen and just follow the way I'm trying to explain you because this is a like very instrumental fundamental change and you will understand the from the traditional market towards the blockchain. So you see the circles without any color like order management. They are the existing traditional market process. All right. We are taking that process. We are not discarding that process. That's the regulated process we have on the capital market, let's say, for example. And then we are applying the new capability with that blue filled circle of blockchain into it. How? So in our banking world today, in our traditional capital market today, there is a front office, there is a middle office, there is a back office. In front office today, we are doing order management and we continue to do so. We do the order management. Now, after the order, our client is onboarding or we get an order to buy or sell or do trading, right? Or to buy an asset shares. The trade management happens manually. So they are usually humans doing it. We can implant a smart contract, which is like a bot. Uh, and whatever the bot does, remember it goes into the ledger. We can implant that, and that bot can do the trade management on the behalf of for the client. So all the KYC, onboarding, checking whether the customer is AML KYC CFT checked, and uh, all the documents are ready or not, it does it. And when it's ready, it goes to the portfolio management. Again, the portfolio management can be a mudarib, can be a, investment manager. And they what they can do is that they vet everything. Once they approve it, we open up a wallet or account of a customer, just like in bank we do. So the moment it's approved, automatically you open up a blockchain account. You don't have to, the customer does not have to do anything. And we just give the key to the client. And we'll talk about the keys and multi-signature and the security later on. But just imagine there's a automatically account open on the fly. So the I open up an account, I did my KYC, trade manager look into it, I'm fine, my risk profiling is done, account is open. Now I have an access to the trade management. I go whether I'm primary market or secondary market, I do whatever trading I want. I don't need anybody 24 into 7. When the trade is of course when the trade is happening, we are also doing behind the scene the asset management, collateral management. That is still there are some screens on the platform. They are the fund manager or the investment manager or the people who have access. They are doing the collateral management as they do at the middle office. They are doing performance measuring, valuation is happening, revaluation of the asset is happening, all the risk management, fraud management, everything is happening. KPI tracking, milestone of the issuer, meaning the guys who have rolled out the Sukuk or the guys who own the real estate or the commodity traders, the performance has been checked. Price feeds are coming from the traditional market, meaning there is a, for example, in Dubai we have Dubai Mercantile, something like exchange or any exchange, commodity exchange, or in UAE we have RERA, right, who's the controller of the what do you call the real estate regulation. The price feeds are coming from that. So we are getting that price feed, we are importing that traditional price feed into a smart contract, right? And we are validating the smart contract again and again with all the processes are good, apply the price. The prices are coming real time. The trades are changes on the tokens are happening real time. Validation are happening on each transaction we do. So the moment any change happen on the pricing or the change of the ownership of the, just give me 1 second. Sorry for that. Everything is audited. So any activity, any change on the token at the token level or any movement, any inputs coming from the middle office, which are coming from the performance measuring, for example, when those are applied, again the ledgers are validating it, right? And we are doing accounting, contracting, IFRS or IFE reportings, right? Level reportings or standard reporting, which are happening traditionally. Those are churned. Those documents are being churned and they are connected to that issuance, and everything is recorded, and smart contracts are continuously executing the command, the business logic. The logic could be profit distribution. Take a good example of profit distribution. So we have a asset which is doing giving some yield. The yields are coming into the SPV wallet as a profit every month. A smart contracts now understand that they need to pick it up on some certain date. If it is not there, they have to flag it, right? If the money is take that the money is there, take that money, see what is the shares, validate the shares again with the network, check the proof of ownership again. Um, so they know who is the owner, they know how much share or token they have, they distribute the profit, and the nodes are doing it, right? The nodes are nodes in operation, meaning this is like an infrastructure of the blockchain. Nodes are validated and node operation are continuously running and they are verifying all the transactions. So that's a very fundamental difference between how the traditional capital or fundraise market happen, right? Or and how it is done on the blockchain. And we will talk about it step by step in tomorrow's class. So I think we are 5 minutes up, so we will conclude this today. I hope that you gain a good knowledge. I'll just take a couple of questions and we go, and then we will inshallah connect tomorrow. So any questions from anybody? Okay, I see two questions here. Let me open it up. So, Bismillah. So, Abdullah is asking, can we say that security asset like Mabrook coin is form of Sukuk, blockchain-based Sukuk? So, oh, that's a very good question. So, see, Mabrook, there is nothing like Mabrook coin. I just use it for the sake of explanation. Um, every coin will have its asset tied with it, right? So let's say if there's a property called Mabruk, maybe I'll call it Mabruk coin. But there is no intermediary coin that you have to buy first Mabruk coin and you take Mabruk coin and then you buy the property, the assets, right? Or you can buy any token on the platform. No, it's not like that. We at Mabruk strictly avoid it. I mean, we could do it. There's no problem with that. We have to basically see the Sharia ruling. But I think when we started, Sharia was very clear with us that each asset has to have its own token. So the end-to-end connectivity should be unique for each token issues you want to do. There should not be a middle token or something. So that's why in any tokenization we do using Mabruk platform, Alhamdulillah, which is Sharia certified. It follow all the IFE Sharia standard. Each token is unique. So yeah, so that's a quick answer for that. Um, okay, what else? Again, another question from Abdullah. Mashallah, there's quite a few questions. So traditional Sukuk themselves are actually form of tokens, not based on blockchain or digital world. So Sukuk themselves, Sukuk is nothing, right? It's a debt raise. So Sukuk is a debt raise for any issuance. Mostly it is used for sovereign infrastructure. So when you tokenize those sukuk, you get the traditional world still stays in its form, but when it comes to the blockchain, now you have a reflection of or the digital reflection of that entire sukuk on your blockchain. That's the difference between, right? It's like a digital tool. So you have the traditional sukuk and then the digital sukuk inside the blockchain. Okay, RWA tokens and NFC. That's a very good question. So RWA is a real world asset backed token, and this is not fungible. And NFT tokens or non-fungible tokens could be representation of something else which is not asset backed, right? Or not real world asset, meaning that both tokens cannot be like Bitcoin is fungible. So if I we have one Bitcoin, it's like a pizza. I can fractionalize it. I can take one piece of it. In security token, RW token, just like NFT, you cannot take it. So yeah, you can just call it NFT, but that's not the right definition, right? What is the difference between tokenization and securitization? Um, it's a technology difference. Remember tokenization, when we say tokenization, we are doing all the investment banking, capital market stuff on blockchain infrastructure, right? So that is the difference. Securitization is one of the product. You can have multiple product on it and the sky is the limit. Okay, please help with us with complete slide. So we'll send you the slide. Don't worry. I have to take that some legal structuring out of the slide and then we'll send it to you. Don't worry about that, inshallah. But what you guys need to do is remember, you guys need to go and look into the security tokens standards and learn. Okay. Abdullah asks, is likely tokenization can replace commodity securitization? What is the advantage of tokenization of gold as opposed to ETF? So it's okay. So ETFs can be tokenized itself, okay? And it's being already done in the US. A lot of companies have already gone into ETFs. One of the good example you can see is Robinhood. You can look into it. They are very crazy on it. Um, Tokenization can replace commodity security. Yes, tokenization again. Remember tokenization. When you think about tokenization, think about blockchain. When you think about blockchain, remember blockchain is an infrastructure. Example. What is the difference between Amazon Web Services, this cloud services, or GCP, Google Cloud Data Center, right? Microsoft have one more, I forgot the name, Azure. What is the difference between that and me having a private data center? Similarly, what is the difference? The infrastructure they are going to provide me is more robust, I have more redundancy, I have more backups, right? Similarly, when you think about anything, tokenization, anything which is happening on the blockchain, all right, I want you to focus not on the cryptocurrency or the schematic of the product. I want you to think of the blockchain infrastructure, what that blockchain infrastructure is providing me. I don't want to make it complex. Take an example. We were talking about trading. Trading needs settlement. So somebody has to really put the stable coin on the wallet for me to settle the trade, right? Now, how that stable coin will come? Because stable coin are being done in some separate blockchain, right? How that's going to be done? So we have to see, does our blockchain provides the ability to get that stable coin on the infrastructure. If not, then we don't have to use it, right? So that's the core difference I want you guys to understand. Don't get confused into the product versus can I do this product on the blockchain? You can do any product of capital market, retail banking, corporate banking on blockchain, right? So, but very good question, very good question. And any maybe tomorrow, inshallah, we'll have some live conversation as well, so I can be more interactive. How can Sukuk can be traded in form get profit? Yeah, you can tokenize Sukuk just like what is the how that Bitcoin is being traded. Similarly, once you tokenize it, basically you are inheriting the ability to trade just like Bitcoin. All right. So I think that's it for today. Is there any live question? Maybe we can take one two live question. If somebody wants to ask a live question, they can raise their hand. We can spend maybe 2 3 minutes over that.
Yeah, or so far, what was, were you expecting the same? Uh, how was the thing? Did you understand? Is there anything that was unclear? Because from on tomorrow's class, same time, we are going to make sure that the baseline is settled, and now we'll be moving forward from here onwards. So people who are joining the class today are more beneficial. Video of this will be shared, but as Fahad says, slides have to take some permission before sharing the slides, or maybe some of the slides will be taken out. Perhaps you can look into the video, so that would be great. If there are any live questions, Brother Yusuf, Abdul Kadir, Abdullah bin Taqir, Ahmed Hayat, Amina sister, Charles Guzarmes, Hakim
How
Halim.
hmm. How can they ask? They just have to raise the hand. They have to
They
click
just
the
have to
raise
raise
hand.
their hands and I will unmute them in case if
Okay.
they are interested in asking
Okay.
questions.
Okay. We'll give them like a minute just to think about it. See, everybody, I really want, because in these 2 days, we are not going to start coding, right? And we don't have to code. So a lot of people, when you speak about the blockchain and smart contract, they naturally think that, oh, Fahad is asking us to be Bachelor of Computer Science or Master of Computer Science. No, you don't have to. There's infrastructure. All you need to do as a product manager or a risk manager or somebody's auditor, understand the concept, and that's it, to get a hang of it. Go ahead, Suleiman. Hassan, you have to unmute Suleiman. Brother Suleiman, you can unmute yourself.
Okay. Good afternoon, sir.
Good afternoon, brother.
Based on the training I attended with one Islamic bank, that they are talking about the uh, blockchain is prohibited based on according to Islamic banks due to its uncertainty and some other aspects that were not real or they were not clear. But today, based on what you are saying, like the Islamic bank are now coming off with going into cryptocurrency, but in form of using their using Islamic products like the Sukuk, the other Islamic products. So that means all the conventional ones that they are using will no longer be done by the Islamic finance institution. Or is there any form they will translate the one they are doing in the conventional one?
Okay, Brother Suleiman. I was struggling to understand. Maybe your voice quality is not that good. So please, if you can help me correct if I understand your question right. Your question is that some of the Islamic bank or Islamic institution are offering cryptocurrency or funds. Can you please
Yes,
help me? Okay. And your question is that how they are Sharia compliant, those cryptocurrency? That's your question?
you say sir?
Okay. So see, any cryptocurrency, when we say it's halal or not, I can get, I'm not a Sharia scholar. I'm a practitioner, right? So I can tell you one thing. So for us, it's very important that anything which goes via IFE, we'll accept it. There are regional fatwas, there are regional approvals, and we respect that as well. So for example, if you live in Bahrain, you can basically XRP is now Sharia compliant. You can buy and sell XRP. There's no problem with that. That's the cryptocurrency. When it comes to tokenization, as far as the way we show you and we demonstrated to you, and I try to explain you that we have a real estate project, we have a certification happening, right? And we have done the legal transaction, which is Sharia certified, and our Sharia board is saying, Mabrook Sharia board is saying it follows the IFE compliance. And they also come into the system and they check everything, right? There's a short Sharia audit also. It's not like that you just take the certification and you forget it. Your blockchain platform has to provide them the real access so they can audit, and Mabrook has done it, alhamdulillah. So once that is done and the token are minted, they are halal. And halal means that they have to comply with Sharia in their operations also. Just like in our banking operation, if we structure a transaction and there's a routine audit of Sharia, and Sharia is giving us a green signal all the time, that's fine. But if becomes yellow and red and they have some observation or they have a problem, we can end up into non-compliance, right? And the token can follow the same regime. So if Sharia has a problem, they have an access and they can raise all their concerns. If we don't solve those concerns, the tokens they are connected, right? So tokens are like connected to the mother body in decentralized way. So any concerns they have will be reflected and notified to the token holder as well. So that's the beauty of the blockchain. So as far as they are green and they are passing the Sharia audit, they are halal all the time, inshallah. I hope I answer your question, so way. Okay, I don't think so. Anybody have any questions more?
Jazakallah, Fahad, for your time.
Yeah,
Thank you very much for once again taking this initiative of conducting this class. I know how busy you have been continuously. So, with that, I would thank everybody who have joined the session today. I would also like to thank our partners, the supporters who have supported this cause for the public awareness. And inshallah, we look forward, all of you, to come tomorrow and benefit from the session. Assalamu alaikum.
sure. Thank you very much. Assalamu alaikum, everyone. Thanks for joining, for your time.